These weekly paying dividend ETFs have taken the investing world by storm. And so there's more and more coming out now. And so I am going to be doing a strategy where I buy every single one of them for your viewing pleasure. Now, by me doing this, I'm not endorsing these funds. I'm not saying that they are great and they're going to do well. All I'm showing you is that I bought them to show you how they perform. And that is the goal. So I'm putting $700 of my own dollars into these funds for you guys. And I hope that I don't lose a ton of money on it, because if I do, that would really not be the best for me. But either way, I think it's worth it to see exactly how they return. And I'm going to be turning drip on for all of them. So they will be repurchasing every single time they pay a dividend. We will be buying more. And so I'm super, super excited. Now, the funds that I'm talking about, I did a full video on them when they first announced, but I want to bring it up again. We're going to be looking at the 3 Defiance ETFs, which are QQQY, JEPY, and IWMY. These 3 just recently switched to weekly paying. And same with these YieldMax ETFs, YMAX and YMAG. These 2 are also recently switched to weekly paying dividends. And then we have the king, I would say, of weekly dividends, RoundHill, with QDTE, XDTE, and RDTE, which I believe is the company that made weekly ETFs, weekly dividend ETFs, a thing. We did not know about these kind of strategies a while ago, and now that RoundHill's done it, everyone's copying them because they've seen some crazy success. So that being said, if you're interested in seeing weekly dividend updates, seeing how much money these are paying me every month with just a little bit invested, don't forget to like the video to show me you want more of this content, and to subscribe so you don't miss an episode. And I'm not sure how often I'll be putting out videos. It might be every week if you guys want me to. I'm going to go based off of what you guys want and show exactly what these ones do pay. And I think it'll be very beneficial for those that are interested in buying these. So like I said, don't forget to like and subscribe. I'll put out some videos every single month at least to show you how this fund performs. But let's just jump right into it and get into the funds and what they are paying. I am starting this account on Moomoo. So I've never used this account before. I can't use any of my other accounts because they already have balances and I've been trading on them, like you guys know. So this is a fresh start for me. I did partner with Moomoo. I have a special discount code that gets you guys, I forget what the benefits are. I'm not even gonna lie to you. I forget what they are, but there's a link down below if you're interested in opening an account. When you open an account and fund $100 worth, I get some bonuses and you get something extra. They currently have a really high, like a high yield savings. You get a bunch of money on your uninvested cash, which I really appreciate. It's like 8%, which is insane because interest rates are going down. This will not last forever. So if you need a place to park your money for some extra income, that's where I'm going to be putting some extra cash potentially. Now, that being said, we can see everything on Moomoo. It's a really beautiful trading account. I think that they've done really good with the analysis and comments, and all the information's up here. And so we're just going to use it to break down each of these funds today. We're going to go over them, the dividend yield, the highs, the lows, to see if we're buying anywhere near the top or the bottom, and just discuss these funds. And so by the time on Monday, when the market is opening, I will purchase each of these funds and we will start tracking them in this account. We'll start with Defiance's QQQY. This fund is currently yielding 85%, which is insane. That is, I know we've talked about all these funds like with YieldMax having 100+% distribution rates and whatnot, but these funds still, they amaze me. As someone that's been hunting dividends for a long time and been happy with an 8% yield, 85 is wild. Now, just because the yield is that high does not mean that the fund is going to make you 85% a year. We saw that when I did a video on IWMY and their 100% yield, which actually ended up being about a 20% annual return over the span of about a year. But when it comes to this one, the 52-week high, this one's at a really good price, in my opinion. We've seen it fall off a little bit from this just under $38 back to about $36.5. It doesn't look like it's in a bad position. A low of 29 on the 52 weeks, which isn't great, but it's been climbing since then. So I don't think we're going to see some crazy drops or anything. But you never know with the market and with what has been going on with U.S. politics and the election and everything with interest rates. So we never know what's going to happen with these and with the overall economy. So I'm not going to say that this one's going to continue to trend upward or downward. I'm just buying it to see what it does. Now, like I said earlier, these ones, they operate off of a put strategy, different than the covered call strategy. And we've seen a lot of covered call strategies, whether they be synthetic or they actually own the underlying funds, like the, which one is it? The Neos funds that I really love. They own the funds, so you get a lot more price appreciation. But still, I think this one has a lot of potential. That yield is insane. And the Defiance team, they need to prove themselves to me a little bit more first. I only heard of them relatively recently, so I'm not as sure with them. But the drip returns on all of them when I threw them into a drip calculator were pretty solid. So I am happy. They were all yielding our average return of like 16 to 20%, which is, again, amazing. If you're looking at it at, oh, I want 85%, that's not really plausible. It is possible, but it's rare. And so when you want repeat, just good, solid income, 20% is out of the park, in my opinion. So with that being said, let's jump into our next one, the JEPY fund. So I completely forgot that they changed the ticker for JEPY. It is now WDTE. This is still a Defiance fund, even though it's more similar to the RoundHill names now, but this is how they're pushing that it's weekly. So I wanted to bring that up. This is it. We are going to just forget that I said that it's the other one. This is the one that's weekly. I don't even think the other one is trading anymore. Or if it is now, it won't be for long. They're converting it into this one, into this ticker, which is why the data wasn't showing up. So assets under management, 97 million. Average price of 44, high of 44, 37, low of 36. So a pretty good disparity between that, but we have seen the markets rocketing back recently, even though things are still a little bit rocky. Dividend yield of 54%, really, really solid. And, total shares, turnover rate, volume ratio, all that. If you're using options, you might want to know more, but I'm happy. I'm happy with it. The analysis is short because this one did just convert, so it's not pulling the data from JEPY. And so there's not a whole lot with this one yet. We'll see how it performs. We saw how JEPY performed, but this shift to the weekly dividends, I think, is going to make these much, much more popular. And so I'm excited for that. And part of the reason why I'm making these videos is because I think these funds can do really, really well over time. And I want to just kind of get rid of some of the backlash and things people saying about them with the crazy high yields. Now, the yields are pretty insane. I will say that. They're unrealistic to a point. But I want to see how they still return money, because I don't want anyone to be too afraid of the yields to buy these funds and miss out on making some decent returns, and vice versa. I don't want anyone to throw all of their money into these because they think it's going to return 54% every single year, which is really unlikely. So this is a realistic look at these funds. That being said, let's jump into IWMY. I'm most familiar with IWMY because I already made a video about it, and the yield when I checked was over 100%. Currently, it's sitting at just under 88%. Which again is remarkable. IWMY had a solid return. I believe the last 10 months it returned like 16%. And they were estimating it would make about 18 or 19% over a year span, which is phenomenal. But when it comes to this one, this is riding the put strategy on the Russell 2000, which is different. If you're not familiar with the indices, I'm not going to give all the details, but the Russell 2000, it's smaller companies, so it's typically higher risk, which people don't often like. They want solid, less risky investments, especially when you're looking at these indices. But that being said, because we are riding option strategies on these, smaller can be better. You have more volatility, thus higher premiums. The premium is what you get when you purchase an options contract. It's cash that's immediately given to you for buying the contract. And so when premiums are higher, risk is usually higher. So you want to find a happy medium with what you're looking at. Now we can see the 52-week high of 37.56. All these funds have been tracking relatively similarly. And one thing we can see is the payouts with this one, because before it was monthly, now it is weekly. So this chart will probably start to change a little bit. Hopefully they don't have to deal with the NAV erosion and whatnot. I'm waiting to see how that plays out. But a week low, a 52-week low of $31. So, and that's just at the beginning of when it was trading. So not bad whatsoever. Out of all the Defiance ones, this one's probably my favorite. I think QQQY had a better return, but I think IWMY has some really solid potential just because it's on the Russell 2000. And again, a lot of that depends on how the Russell 2000 performs. But I'm curious. Again, the Defiance funds are not my bread and butter. I've only looked into these a little bit. So YieldMax and RoundHill I've been watching a lot longer. And so I'm curious to see who's going to win. What fund is going to make the most money the first year and a few months of trading. If you guys want to bet or guess down below, let me know. Let me know what one is your favorite. If I had to pick overall, I'd probably say XDTE from RoundHill or YMAG from YieldMax because of the Magnificent 7. But let's talk about those ones. Let's jump into YMAX. YieldMax is a very interesting idea. This is a fund of funds, as they call it, meaning that this is basically made up of all the other YieldMax funds, or a good portion of them, I should say. So they own other ETFs, and you make the money off of those instead of owning them individually. If you didn't see my last video, YieldMax is completely changing how they're paying dividends, and it's really smart in my opinion, so go check that one out. They are basically restructuring it to where you can make money weekly without having to own a weekly paying ETF. You can still own the monthlies or own 4 of the monthlies and get paid weekly. By the way, they're scheduling the payments. Now with YieldMax, these ones are higher risk to me. We've seen the YieldMax ones, the erosion has been really killing these funds. But that being said, we can see the max chart started trading 2024. We're not even to a year yet with this fund. And so average price of 1786, current price of 1789, and a low of 1779 and the high of 18.5. So this one hasn't had a lot of spread, which actually doesn't bother me with these funds because I am not buying them for price appreciation. I'm buying them for the distributions. And with a 27.32% distribution rate, that is phenomenal. It's a lot more realistic. I think it's much more possible than the ones that are in the 90s, but only time will tell. Now, depending on how you feel about the YieldMax funds, like I said, I have seen them drop like crazy. When the underlying fund does well, the YieldMax funds, the payments are insane. You look at funds like MSTY or NVDY, which are on MSTR and on NVIDIA, and they knocked it out of the park. For a point in time, CONY was their highest yielder, and it was performing extremely well. That's on the CoinMax or the Coinbase fund. So it really depends on the underlying fund and what you're looking at, but to own YieldMax and own just a piece of a lot of the funds is not a bad idea in my opinion at all. I think that there is a little bit more safety with that if you are unsure about which one you want to own individually, and the return will speak for itself, hopefully. We have seen it bounce around quite a bit more than the other ones percentage-wise. But again, when you are looking at these option funds, that's going to happen. It's going to happen depending on the market, depending on all sorts of things. So looking at YMAG, this is the YieldMax fund on the Magnificent Seven. Let's see if I can remember them off the top of my head. You have Google, Amazon, Tesla, Microsoft, Apple. Oh man, do I only know 5? There's a few other, but NVIDIA. Oh man, there's one other one that I'm not going to remember, but that's okay. So it's based off these Facebook, Meta. It's based off of these larger companies, really heavy in tech and really popular at the moment and probably going to perform well over the next 10 to 15 years, just based off their history and where the world is going. I mean, NVIDIA, especially with microchips, it's insane. So this one is definitely a safer bet. Lower yield of 23.46%. And you've seen a lot better price appreciation with this one. It started at $15.50. That was the low. Traded all the way to a high of $20.23. And then has dropped down to $19.35. So we are buying closer to the high. But because of the switch to weekly paying dividends, I think that this one will get an influx of cash. Assets under management, 143 million. Lower than I expected, to be honest. I expected these ones to have lower or have more than the Defiance ETFs, but they actually don't in a couple of these cases. So I'm surprised by that. You can always go down and check out the analysis tab on here too. We can see the short volume has been dropping off. It was when this thing was trading for higher around this September 16, 17. Short volume was up and has since then fallen down a little bit. And then, that's daily short volume. Short interest is kind of all over the place. But I do like that Moomoo has those just right there, easy to see. Then you can also go to the comments, check out what people have been saying about them. You can find out news articles and whatnot and see the distribution rates and a lot of good information. So they even talk about in here about the dividends and when they're declared and whatnot. So YMAG is my favorite YieldMax fund. I think it has the most potential just because of how it's structured, I guess you'd say. And I don't own it currently, but now that I'll own it inside this fund, I am excited to see how it performs. I think it will outperform many of the other YieldMax funds. And I think the NAV erosion problem will be very, very small with this one as long as those 7 funds can keep up, which again, they're some of the most popular companies you can buy currently. So I don't think they'll have a problem with that. Let's jump into the RoundHill funds that took the world by storm. QDTE was the first one. I don't know if XDTE was right after. March 4. I think they're pretty close together. And we've seen some decent price appreciation. Nothing really crazy, about $5, which is lower percentage-wise. A couple percentages up, but actually they have been paying out the weekly dividends. They've been pretty consistent with it, and people just love it. So I own this one already. I'm only up a couple percent, but I don't even remember when I bought it, what the price was. So a lot of assets under management. We can see 445.39 million, which is insane. I mean, you're talking 4 times larger than some of the other funds, and that's due to the popularity of this fund. I imagine XDTE will be lower, but probably pretty close. We can see the 52-week high of 42.98 and a low of 35.45 when just after it started trading. I shouldn't say just after, a month after. So it's seen some bouncing around. We've seen that. We know the market's been all over the place, and that these really react negatively when the markets drop. But the interesting thing with these, and let me tell you the difference with these 0 DTEs. 0 days to expiration, how this works is you're able to capture more. What's the best way to phrase this? You can make or lose more money in the market because of this. Because what that means is the underlying fund is owned, and thus if that fund does poorly in pre-market or after-market hours, you will feel that in your account. So if QDTE, what is this one? This is NASDAQ. I believe this one is the NASDAQ 100. They don't say that because they can't. But the way that works is if the NASDAQ does well after hours, you'll make more money because they own the shares. And so you own the shares through them. So you're actually trading and getting money based off the price of them. If it goes down, then you lose money. And so that's what really revolutionized how these work. And I knew when I first read that, I was like, that's a crazy way to do things. And so, yeah, the RoundHill is S&P 500. XDTE is S&P 500. QDTE is the NASDAQ. So we've seen the highs and lows, dividend yield of 20%, significantly lower than they were boasting. They were boasting about 60% on the website, but I'm not sure why or where they got that number. It's probably based off the last distribution, which the distributions have been pretty solid. So QDTE, probably the most popular. I know people say that XDTE performs better, but QDTE did have a higher yield. I'm not sure it does now, but I do, like I said, I already own this one. I own all 3 of these. And so they've been paying me weekly, and I haven't even been watching it. So I really probably should, but that'll come out when I start posting my monthly recap dividend videos. So let's jump to XDTE. So yeah, significantly less AUM, which is just under 160, and a lower yield of 12.52%. But we've seen some good price appreciation from this one. It's up about $7, even more than that from the low, about $8, almost $9. And so it depends on what you're looking for. If you want higher yield and maybe a little more NAV erosion, QDTE. If you want better price appreciation but a lower yield and lower dividend payments, XDTE. Who knows what RDTE is going to do? We haven't seen a lot of payments from them yet, but I'm excited. I'll be putting out some more videos on RDTE when we do see some of that money coming into the account. We can see the 52-week high. It's right at the 52-week high, just barely under it by about, 8 cents? 1 cent. Less than a cent. So 52.86, not 1 cent, 16 cents compared to 52.7, and a low of 44, which was right after it paid out its dividend and then bounced back up. So we can see they're consistently paying these dividends down here. We saw the same thing with QDTE, and it's a pretty solid fund. I don't know how much. I think I put about $500 into this one just to see what it does. But I'm excited. I'm excited to see the price action for this one compared to just the dividends and see if it can hold up and be the best like everyone's saying it. So let's jump to our last one, RoundHill. RDTE. Only a couple days of trading, maybe a couple weeks even. It started trading, what day is this? September 9. Yeah, 20 days. And so not a lot. Assets under management really low, 32.46, because it is so new. When I first looked at this one, it was 0.8 million. So it wasn't even $1 million in AUM when I first started. I think even when I bought this, it was that low. Or it was just significantly lower. We can see the dividend yield isn't up yet. they haven't paid enough, I'm sure, for them to be able to track it. And so that's why I think some good videos will come out about this one soon that I'll be watching. I'll be making some content on it on my own channel. And we can see the total shares. So total shares is 730K. XDTE, 3 million. QDTE, 10.5 million. So this thing is still very, very small compared to the other ones, and will probably continue to remain so until it's got some solid dividend history. So that being said, here's all the funds. I will update you guys in a week after I purchase them. Every single video, here's how I'm going to structure them. We're going to go over the price appreciation for each fund, how it performed the last week, and then we're going to look at the dividends that were paid out and how the fund has returned overall. So with 3 things every video. If you want to see how these ones do with $100 invested, this is the channel for you. I'll probably make these a priority, and let me know how often you want the videos. Do you want a weekly update? Do you want a monthly update? Let me know in the comments down below, and don't forget to like and subscribe so you don't miss out on those videos, and so you can see more of these high yielding ETFs. I talk all about dividends, all the high yielding stuff, because that's how I like to invest. And I hope you found this video useful. If you did, don't forget to like and subscribe. So I'll see you guys in the next one.